Today I'll be discussing tips and traps for management companies. And in particular, we'll be talking about income received by directors, how that is taxed, and the expenses available to directors. Okay, so quickly, the outline for my discussion is, why is this important to everyone, and in particular to directors? What should be included in the contracts? The tests and criteria to determine if the fees received as a director is going to be income as an employee or independent contractor. And then looking at some of the expenses available as an employee and contractor. And lastly, we're going to talk about the personal service business and the rules relating to that. So why should this be important to everyone? Why are we looking at this again? Withholding taxes, CPP and EI, should be withheld from salaries earned by employees. And the reason why it's important to everyone is, as directors and as a company, all directors and the company will be liable for withholding taxes withheld from employees. On the exercise of stock options, tax and CPP should also be withheld and then remitted to CRA. But on the flip side, CPP and withholding taxes are not required to be withheld from independent contractors on stock options or on the fees earned by independent contractors. It's also important because the expenses available to independent contractors and employees are quite a bit different. So let's quickly talk about the tests and criteria. The treatment as either employee or independent contractor will depend on the facts in each of the situations. In Canada, the Weep Door case is the leading court case that we rely on, and the CRA is actually relying on it too. And it outlines 4 different factors that the CRA looks at to determine if someone is considered to be earning the income as an employee or as an independent contractor. The 4 factors are the degree of control, the ownership of tools, the chance of profit or loss, and lastly, the integration. So when we look at the degree of control, some of the questions that you can ask is, does the individual perform the services on his or her own account, or are they actually performing the services on behalf of someone else? Does the individual control their own day-to-day activities? So is it someone else that decides for them what they should be doing every day? What is the relationship between the individual and the person that directs the individual's duties? And does the individual have the freedom for the timing of when services are performed, how the work is done, how the services are performed, and any of those things? When we look at ownership of tools, generally we think it's pretty simple. Do you own the tools or don't you own the tools? But it goes a little bit further. Does the individual own the tools that are required for the job? And it depends on which part of the services that you're looking at that will be looked at there. Do they have the ability to hire their own assistant? And if they have the ability, do they actually do that? Does the individual have their own office? So it goes further than just tools. It's, do you have your own office as well? And does the individual pay for their own expenses? Or are the expenses that they incur simply reimbursed by the company that they're providing the services for? On the chance of profit and loss, some of the factors that CRA consider are, can the individual increase their income through the contract? Or is it a set monthly fee that they receive? Does the individual take any financial risk? Is there any risk of them not getting paid? Or are they an employee and just receiving their monthly allowance even if they don't perform well? Can the individual profit by sound management or good business, or lose business if business declines? And then does the individual get paid on an hourly or monthly basis again? When we look at integration, some of the questions are, does the individual's work form an essential part of the company's business? Or are they a standalone business on their own? When the individual is doing a job, is he engaged on behalf of himself or is he performing a service on behalf of a different company, of the company that they're providing the service to? And is the individual's work an accessory to the employer's or the company's bigger business? So those are some of the factors. In the Connor Holmes case, the courts clarify the impact of the party's intent, their express intent, in a two-step test. And the first part that they looked at is to establish each party's subjective intent. You have to look at the written contract, the contractual relationship between the parties, and that can be documented by the invoices that are provided. Are they registered for GST? Is the independent contractor registered for GST? And is the independent contractor actually filing their tax returns as an independent contractor, or are they filing as an employee? And then the second part is you determine, is the objective reality, is that supporting what we feel that it is? So then they went back to the Weep Door case. And you have to have both. You have to look at the contract and the test that was set out in the Weep Door case. So as I mentioned, a contract can be used as evidence of the nature of the relationship between the parties, but it's not the only factor that CRA looks at. Some of the terms that should be avoided in contracts, if you want to be seen as an independent contractor, include stuff like vacation pay, your set hours that you work, overtime compensation, minimum hours in the office, and the use of an employer's computer or any other tools. So any right that you feel that can be associated with employment. So your right as an employee, any of those rights that you would want to have in a contract specifically. If you want to be an independent contractor, it should not be in the contract. Some of the provisions that could help you minimize your risk that an independent contractor can be found employee. Some of the things that you can really consider including is to define the relationship as a relationship that you want to be seen as an independent contractor and not as an employee. Avoid terms like your position, the duties that you're going to have, and that is actual job or employment. Have a time limit to the contract. Have a 3-month or a 6-month, or have it to perform a set of services. And you can always have the option of renewing the contract, but it should be for a set period of time. Ensure that you can also have other contracts with other companies, so it's not just limiting you to work for the one company. And avoid the option of having them control the time where all the services are provided. So it has to be in the office, and it has to be between 9 and 5, and all that kind of controlling factors. Avoid the requirement to report to a supervisor or any of the kind of employment-related requirements that you would find in a regular employment contract. And provide invoices for the services that are being rendered. Make sure that you're registered for GST and charge GST on the services. Have your own business cards. Don't use the business cards of the company. And then provide your own tools where possible. Okay, so next let's look at the taxation of directors' fees. Generally, under the Income Tax Act, a corporate director is considered to be an employee if the individual is elected and if they receive a fixed amount of remuneration. So most fees received as a director, as director's fees, will fall under this, and most of it will be employment income. So when we look at this, the rules that apply to employees will generally therefore also apply to the fees that directors receive as directors. And because of that, the money will be included on the income tax, the money will be included on your T4 tax on your tax slip, and CPP will have to be withheld from it and taxed as well. Generally, EI is not withheld, but it really depends on the relationship that you have with the corporation. And the same goes for stock options. As I mentioned before, on the exercise, you will have the withholding taxes and CPP that will be withheld. So, and to go further, if you've got next one. If the employment rules will apply to directors' fees received by directors, the benefit rules will also apply. So any taxable benefit received as a director performing director service, director's kind of services will also be a taxable benefit as an employee of the company. So generally the benefits that are personal in nature will be included as taxable benefits. And then the amount of the taxable benefit is generally based on the fair market value of the benefit that you receive. For a benefit to apply, there must be an economic advantage to the director. It has to be as a result of a relationship between the director and the company that he's providing the service for. The benefit has to be measurable in terms of money, so you have to be able to actually determine the value of the benefit that the director is receiving. And the director has to be the primary beneficiary of the benefit that he's receiving. So some of the common taxable benefits that we have seen for directors include automobile benefits and allowances for the personal use of a business vehicle are generally included. But if you look at the allowances that you can receive, that is allowances that you get reimbursed for, that is a reasonable amount, and that's generally based on the kilometer of use. Those allowances are not taxable benefits. Cash gifts are always taxable benefits. Disability insurance premiums will be included in taxable benefits, and certain low interest or no interest loans are also included. For taxable benefits, there are some gray areas, and CRA always provides a lot more commentary on these areas. And they provide some administrative relief. In particular, some of the areas are Christmas parties and certain non-cash gifts, and then professional membership fees. Okay, so what expenses are available to employees? Some of the common deductions that are available to all employees, including directors, are traveling expenses for to earn the employment income, parking, stationery, your phone, salaries paid to assistant, motor vehicle expenses. This includes your gas, insurance, repairs and maintenance, financing charges, and lease costs. Lease costs are limited. Then you've also got your home office. But a home office expense is only available where the space is either for the employee's principal place of business or used exclusively for the purpose of earning income, and the use is used on a regular basis for meeting clients in relation to the business. So it's a very narrow scope, so really look at that before you determine if your home office can actually be deducted. Be careful not to include expenses that have already been reimbursed by the employer. And then expenses must be required by the employer. And a Form T2200, the name is Declaration of Conditions of Employment, need to be provided by the employer. And a copy of it should be kept. So, if you feel that the services that you are providing is as an independent contractor, then the next area applies. So generally what we see this being applicable is for management services or admin functions that are provided. And usually what we say is try and keep them separate, have two separate contracts, but I'll get a little bit more into that a little bit later. Ensure that your contract that you have for your independent contractor services that you're providing is not the same as the general employment contracts that are out there. And like I mentioned, ensure that you've got a separate contract for these services. If you are providing to, keep them separate. And one of the examples is engineering services. It's a common one we see as well. So if you're providing engineering services and you're a director, you may have the possibility of having your engineering services as an independent contractor, but your director services as a Director B employment income. So once again, for the independent contractor, the treatment of that, we go back to the Weep door case, which is in the first couple of slides that I discussed. We go through a test there and we determine will the income earned fall into the independent contractor. So make sure that the contract is for a limited time. Make sure you can hire an assistant and if you need someone. If there's a limited time to a contract, make sure that you are not limited to just one company that you're providing the services for. Make sure that you have the option of providing services to many companies, as many as you want, but, and with this, we don't limit you to because you're providing services to just one company doesn't mean that you're not an independent contractor. It's just giving you the option of being able to perform services to many different companies. And make sure that you buy your own tools and you're not reimbursed for them. So some of the expenses that are available for independent contractors, it's really broad. So it's all expenses incurred for the purpose of earning income or producing income from a business. So generally we see accounting and legal fees, we see bank charges, we see salaries, and we see meals and entertainment. For the salaries, just make sure that if you're going to be paying salaries to your spouse or your kids, that you limit them to be actual amounts for actual work performed. And for kids under 18, be really careful. They have to actually be performing some form of service. If you're an incorporated independent contractor, you might consider doing dividends instead of paying salaries. So I'll hurry up with the rest of us. Personal service business. So why do we care about the personal service business? And what is a personal service business? Personal service business is any time that you, as a person providing the services on behalf of your wholly owned company or a company that you are one of the main shareholders for, could be seen as an incorporated employee. So if you're an incorporated employee, your company could be seen as a personal service business, and it probably will be. So what was CRA's intent in bringing in all of these rules? The reason why they wanted to do that was to make sure that people don't just simply incorporate to make sure that they can get all of the benefits available to independent contractors while they're employees, and to get the lower tax rates. So I'm not going to look at the personal service business test. You can look at that, and if you've got questions afterwards, you can come and ask me. But the main thing that we're looking for here is that if you're providing services to an associated company, if your company is providing services to an associated company, it will probably not be a personal service business. And if your company has more than 5 full-time employees, your company would probably will not be a personal service business. Directors that are performing, like I mentioned, directors that are performing their services through a wholly owned company will generally be a personal service business. And in the 2014 budget, the budget limited the expenses that are available to a personal service business to salary and benefits that are paid to the individual performing the services, and the expenses that could be allowed as employment expenses. So you're very much limited to only what you would have had if you were just an employee, and then accounting and legal fees to collect your amounts owing to the personal service business. The rates have also increased, so now the tax rate for personal service business is 39%, where it was 26% before, so it's an increase of 13%. And for flow-throughs, it's even worse. The personal service business rules are very, very punitive. And be very careful when you get into that position where you've got two hats that you're wearing. And make sure that if you're going to be performing your services through a corporation, that you are actually an independent contractor. Make sure that you've got all of your documentation. Make sure that if CRA looks at it, your intent, the contractual intent, everything is there. And then you can have, then you won't be a personal service business and you won't fall under this rule. Thank you.